Welcome to today's 24-hour global financial update. Today's focus: U.S. consumer confidence hit a new low in more than 2 years. FOMC meeting, Germany's debt plan, G7 warned Russia to cease fire, U.S. stock funds experienced the largest single-week withdrawal this year, and gold prices hit a new high. Gold prices have surpassed $3,000, reaching a new high. Driven by a surge in safe haven demand, spot gold hit a historical high of $3,004 per ounce on the 14th. Major financial institutions have begun to significantly raise their gold price forecasts, with market analysts noting that if the U.S. implements more trade barriers and protectionist measures, global economic uncertainty will further increase and continue to drive demand for safe haven assets. Next, let's take a look at market dynamics. The U.S. government shutdown crisis has been resolved. The VIX Fear Index has fallen over 10%, and the S&P 500 index has seen its strongest rebound since the U.S. presidential election, but it still recorded 4 consecutive weeks of decline, with gold prices fluctuating around the $3,000 mark. The U.S. dollar index fell by 0.1%, the euro dollar rose slightly by 0.24%, the U.S. Treasury yield rose by 1.17%, and WTI crude oil rose by 0.64%. The S&P and Nasdaq rose over 2%, but still fell for 4 consecutive weeks. Nvidia rose over 5% with an 8% increase for the week. Oil prices rebounded, with WTI crude closing up 0.55% at 67 cents per barrel, and Brent crude rising 5.6% to 70.51 per barrel. Finally, let's look at the market outlook. NVIDIA's annual GTC, GPU Technology Conference, will be held from Monday, March 17th to Friday, March 21st in San Jose, California. NVIDIA CEO Jensen Huang will deliver a keynote speech, expected to announce the GB300, the first joint optical packaging technology switch, and the next-generation Rubin platform, which is anticipated to benefit the semiconductor and technology sectors. Tonight at 11:30 p.m. AEST, the U.S. will release February retail sales data, with the market forecasting a monthly retail sales growth rate of 0.7%. Analysts point out that if the data exceeds expectations, it indicates a strong U.S. economy, which would be bullish for the dollar. Conversely, if the data falls short of expectations, it would be bearish for the dollar.